the best way to trade GME and GameStop using options. I wanted to put together this quick video, and I probably should have done it earlier, but it's better late than never. So the best way to play GME would have been to use a ratio spread. And here, if we look at the chart, we can see that prior to it jumping up, it was trading slightly below $20. So the best trade to make would have been utilizing some sort of ratio spread where you're going to sell a put option to finance the bullish call spread, and the put option would be below $20. So what I would do is I would go out to August 2nd, and then I would buy the $25 call and sell the $30 call. This would give me a bullish call spread, and then I would finance this by selling the $17.50 put option. This structure will allow me to profit $500 for every single bullish call spread that I purchase. Now, in setting this up, let's say I wanted to purchase 8 bullish call spreads, and then I could finance it by selling 10x of the 17.5. That would actually give me a credit of $308. So if I wanted to reduce my exposure and decrease the amount of puts that I would sell, I can actually sell 7 puts and still receive $100. So this would actually be the structure that I would use. In this example, I'm buying 8x of the 25 by 30 call spreads, and then I'm financing it by selling 6 of the 17.5s. The expiration date on the entire position is August 2nd, and I can actually put this on for a credit. The alternative to this would be to actually sell an in-the-money put credit spread. And basically, the only thing I would need to change is to switch this from a call to a put. Everything else would be the same. I would then receive significantly more money. And you can see in this situation, I'm actually picking up $3,610. So I'm collecting that money up front. I can then buy some short-term treasuries or utilize a box spread to get some riskless additional profits. Except unfortunately, in this situation, your max loss is going to be greater than it was previously. Yeah, you can see right here that the max loss is almost $11,000. And I think that for the call side, it was around $500 less than that. Let me just verify that. Yeah, your maximum loss is about $500 less when using the bullish call spreads. So in this situation, I would definitely use the call spreads as opposed to the in-the-money put spreads. And that's a great way to structure the trade. And then when GameStop would increase to around $27 or $28, you would close out the entire position for a nice profit. Visit beststockstrategy.com and enter your email address and receive over $400 of valuable free training.